Welcome to this presentation of BHG. My name is Fredrik Iverson, equity analyst at ABG, and together with us today we have Adam Schatz, CEO, and Jesper Flemme, CFO, who will give a 20-minute presentation of their company. So with that, I'll leave the floor to you guys. Please go ahead.
Thank you, Fredrik. It's a pleasure to get this opportunity to present some recent developments. If we move to slide 2, please. My name is Adam, and I'm joined by our CFO, Jesper, who's just here with me in the room. And if we move to the table of contents on slide 3, Fredrik, please. The way we will play this is I will kick the session off by providing a brief overview of BHG, after which I'll cover some of the highlights of the first quarter. Jesper will then provide some more details on the first quarter before handing it back to me to summarize. We will then end the session with the Q&A. Slide 4, please. So starting off with an overview of who we are, our current position, and key strategies. Slide 5, please. Some quick facts about BHG. We're listed on Nasdaq Mid Cap and have a market cap of approximately 8 billion SEK. We are the largest listed consumer e-commerce company in the Nordics, with a combined market share in home improvement approaching 30%, which makes us the largest European pure-play online retailer within home improvement. And another key aspect of our business model is that we have some 50% of net sales, which is derived from our own brands or our own private labels. Then the bubbles lower down show that our financial history bears out the strength of our model. We have enjoyed a 34% net sales CAGR over the past 3 years, with leading profitability and cash flow generation along the way, and a return on capital employed, excluding goodwill, of some 20% as a result of our asset-light growth model. We thus combine the two hallmarks of what we believe is a sustainably profitable e-commerce company, namely dominating our chosen areas and having a significant share of net sales coming from our own brands. Slide 6, please. We operate in a very large market. The home improvement market in the Nordics is the third largest consumer category, worth some 230 billion SEK, and trailing only food and fashion in terms of size. At the same time, the online penetration of this market is still relatively low at 8% or so, and the market analysts are convinced that online penetration will continue increasing rapidly over the medium term and ultimately level off at around 30%. Which is roughly the same level as consumer electronics today. Forecasted growth is expected to be some 15% per annum for the foreseeable future. So finally then, with an online penetration south of 10%, the online market for home improvement is worth almost 20 billion SEK today, and a 15% per annum growth will mean a doubling of the market in 5 years. We've historically grown considerably faster than the market, but assuming that we grow with the market, this would mean that we would double our net sales from 2018 when we set our midterm financial targets of 5 billion SEK to our target in the medium term of 10 billion SEK. And as you will see, we are well on our way to reaching that target. Moving on to slide 7, please. Our strategy remains focused on 4 cornerstones. Firstly, a continued expansion of our already leading product range. Our portfolio has now grown to include over 800,000 unique products. Secondly, scale and a high share of own brands in our sales mix. With a strong growth in the quarter, we continued building scale advantages, and as we just saw, a significant share of net sales and the growth also came from our own brands. Thirdly, creating the most appealing shopping experience and dominating all things digital. We grew our digital footprint significantly in the quarter and saw some 57 million visits to our destinations, meaning well in excess of 200 million visits on an annualized basis. And finally, offering the market's best professional guidance, service, and support, including our own installation network, as well as our own last mile delivery on the home furnishing side, which continued expanding its coverage during the quarter. So these 4 key pillars comprise what we call the BHG ecosystem. Moving on to slide 8 and launching into the key highlights of the first quarter. Slide 9, please, Fredrik. We recorded the highest net sales, the highest EBIT, and the highest EBIT margin and cash generation for first quarter to date. Net sales came in at 1.6 billion SEK, corresponding to total growth in excess of 33% and organic growth of 22%. We recorded an adjusted EBIT of 80 million SEK, translating to an adjusted EBIT margin of 4.9%, and finally delivered the strongest Q1 cash flow from operating activities to date, amounting to 148 million SEK. We thus strengthened our position as the number one online retailer in the European home improvement space. Next slide 10, please. One aspect that we were particularly pleased with during the first quarter was that organic growth continued accelerating. We've now enjoyed 4 consecutive quarter-on-quarter increases. The 22% number at group level for the quarter was comprised of an organic growth of almost 28% in the home furnishing segment and 18% in the DIY segment, with a market acceleration towards the end of the quarter. Now, of course, we have to comment on the pandemic and the crisis that the world is facing. And as we realized the gravity of the situation and what was an epidemic turning into a pandemic, we focused on 4 things. Firstly, the first one was protecting our people, and the second was protecting our supply chain. We then made sure that we could secure the demand picture, and finally, likewise, could secure the financial position. And very briefly on each of these parameters, starting with people, we took a number of measures which were tailored to the specificities of each of our sites, whether offices or warehouses, with the primary objective of ensuring safety for our colleagues and the secondary objective of securing business continuity. And these measures have allowed us to stay fully operational throughout all our geographies and sites, providing a safe work environment for our colleagues and a continued high service level to our customers. Moving on to supply, we took steps very quickly to secure product availability. These steps included staying in close contact with our suppliers, as well as selectively increasing inventory and securing alternative sourcing wherever possible. Furthermore, the breadth of our portfolio, among other things, secures that there is almost always a substitute product that we can offer our customers in the case of shortages. Next, demand. We didn't see any negative short-term impact on our business in the first quarter, actually quite the contrary, nor have we done so in the start of the second, as consumers in our markets have continued investing in their homes, particularly through the online channel that we dominate. We also believe that online retail in general, and our categories in particular, are well placed in a world in which the nesting or cocooning trends, hemester, leads to a higher interest in and budget for home improvement projects. The underlying shift from offline to online continues, and I believe will accelerate as more and more customers experience the benefits of shopping online. And finally, cash. Cash is always king, and our already strong financial position from the end of 2019 was further solidified in the quarter on the back of an excellent cash flow and with continued strong support from our financial partners. We have now also entered into what is the high season for us, and quarter 2 is always seasonally the strongest quarter from a cash generation perspective. So in all these ways, we feel that our house is fully in order. And with that, we move on to slide 12, and I'll hand it over to Jesper.
Just moving on to slide 13. We are very pleased with our performance in the quarter, and not least the fact that we saw a 4th consecutive quarter of accelerating organic growth. As Adam mentioned, net sales increased 33.5% to reach 1.628 million SEK, and organic growth reached 22.1%. The top line development, coupled with gross margin improvements and discipline on the SG&A line, resulted in the highest first quarter EBIT and EBIT margin to date. EBIT grew by 44.7% in the quarter to reach 80 million SEK. Key factors contributing to the strong EBIT included 1. Operating leverage as a result of strong growth and disciplined SG&A. 2. The private label share of sales in the do-it-yourself segment. And 3. Strong operational focus in both segments on curation and purchasing to optimize unit economics. Next slide. We again enjoyed a quarter which saw a leveraged P&L, the significant top-line growth at 33.5% translated into an even higher gross margin increase at 40%, and a further boosted EBIT increase at 44.7%. The strong performance in both segments contributed to lifting the gross margin by 1.2 percentage points to reach 25.8%, our highest gross margin to date. The pure product margin, which is the measure most commonly used by our listed peers, amounted to 37.6%. As you can see on the right-hand side of the slide, the improved gross margin trajectory from 2018 and 2019 continued also into this year. The main drivers for the gross margin improvement included roughly equal contributions from the two segments. Due to Self, primarily driven by higher share of sales from our own brands, and Home Furnishing, primarily driven by continued scale improvements and inventory management, translating to lower fulfillment and postage costs in relation to sales. Next slide, please. The group's net debt amounted to 499.6 million SEK at the end of the quarter. Our strong operating performance meant that net debt in relation to LTM adjusted EBITDA ended at 1.3 times, an outperformance of the medium-term financial target range. Our financial position remains solid. The cash flow from operations reflects a strong business model, on top of which we had unutilized credit facilities at the end of the quarter of 529 million. Back to you, Adam.
Thank you, Jesper. So we'll move on to slide 16 and then quickly to slide 17. Summarizing, we are the clear online market leader in the home improvement playing field. We have a history of strong growth coupled with profitability and cash flow generation. And we're off to a very strong start to 2020 with our house fully in order, with accelerating growth, with strong gross as well as operating margins, including as a result of the continued increase in the share of sales coming from our own brands. As Jesper just showed, we have a very strong financial position, even before the second quarter again, which is the strongest quarter from a cash generation perspective seasonally. We have further expanded our ecosystem, the BHG ecosystem, through continued rollout of our own last mile deliveries and also the installation footprint. And finally, we are firmly on course to reach our midterm financial targets, which including us becoming a 10 billion SEK net sales company. With that, Fredrik, over to you and questions. Thank you.
Thank you. Yes, we've got some time for a few questions, starting with M&A, and you didn't speak a whole lot about it, but you clearly have a very acquisition-driven agenda, and it would be interesting to hear you talk a little bit about the development you see in your targets as they join your platform.
Sure. So just by way of background, we've made a very large number of acquisitions since 2012, approaching 30 acquisitions. We had a particularly active M&A year in 2019, in which we closed 6 acquisitions. And we started this year by acquiring one company, Hemfint, in February. So we have this history, and with the history of having made these many acquisitions, we also have tried and tested a methodology for making sure that we get the best bang for our investment buck also when it comes to M&A. And the strategy includes, of course, buying companies that in various ways support our 4 strategy pillars that we briefly covered in one of the slides here, slide 7 in the presentation. So, buying companies that makes good strategic sense is where it starts. But we're also very focused on ensuring that the companies that join us and form part of BHG going forward also have very strong management teams and very strong entrepreneurs. And one of the things that makes us attractive as an acquirer is that we can offer these typically outstanding entrepreneurs the opportunity to continue being the leaders of quote-unquote their business. because that's how we operate. We have a decentralized model that really rests on the drive of the people who are closest to the operations and to our customers. So they can continue being entrepreneurs while enjoying the benefits of being part of a much larger company, which includes then us opening up our larger platforms to the product assortment of these smaller companies. So we dramatically increase the shopping windows, if you will, to these acquired companies. And we also, with the scale we have, we can roll out our typically much better supplier terms to those acquired businesses. And then we also have, we think, expertise that is second to none when it comes to all things digital. And that's also an early area in which we make sure that we reap the synergies, rolling out our best practice digital approaches to those acquired companies. And one of the focus areas of our recent acquisitions, in addition to the fact that we want them to support one of our pillars and the acquired companies, including strong management teams, has been to further boost our private label or own brand offering. And that's one reason why we have now, actually quicker than we envisaged, reached a point where, as I mentioned, roughly half of our net sales comes from private labels or own brands.
Yes, thank you, Adam. Very clear. And to follow up on that last part, you're mentioning private label quite a few times in your presentation. Why is this an important focus area for you?
It's an important focus area because we believe that having this mix of well-known external brands and our own private labels or strong own brands is optimal. There is a difference in the economics for external brands and for our own brands, which includes higher margins for our own brands. And that's quite natural because price transparency, of course, in our own offering is lower than it is for well-known external brands. But having said that, we don't envisage us moving in a direction where, all of our sales would be based on our own brands, because there's also a great benefit in having such an attractive and by far the widest portfolio of well-known external brands, because that gives us huge advantages when it comes to traffic generation. And that's one reason why we can have marketing costs in relation to net sales that are so attractive compared to, I would say, almost any other e-commerce company globally, where we spend just north of 5% of sales in marketing, and that's a very, very low number compared to other e-commerce players. So it really is the mix that we're striving for. And with the scale that we've achieved, we now have the opportunity and the capability to introduce a higher share of sales coming from our own brands with the margin benefits that gives us on the P&L.
Also very clear. Thanks, Adam. And a question on your distribution model. You've been taking more and more control over your last mile deliveries lately. And why is that? And have that sort of affected your profitability in any way?
That's a very good question. And I don't have a very snappy answer for it. We have to discuss this from the point of view of the two segments, because we approach it quite differently. Within DIY first, we work with external partners in terms of both in-freight and out-freight, last mile to customers. And we have some very strong partnerships there where we can jointly develop the logistics offering so that we improve the service levels, the tightness of the delivery times and delivery slots and whatnot. Also, we're working on developing a consolidated shipment offering together with one of our key external freight forwarding partners. So within DIY, that's how we're approaching this. But you're right, in the home furnishing segment, we have one part of the business, which is the very rapidly growing Eastern European business, which is fully based on, it's integrated in the business model really, on us having last mile deliveries throughout the many countries in Eastern Europe that we serve. We really offer a premium service to consumers there. So all of Eastern Europe is covered through our own last mile setup. In the Nordics, we started with the Stockholm area in late 2018. And the reason we did that was actually manifold. One was that we felt that we didn't have a good enough negotiating position to the external freight forwarding parties who could suddenly increase prices, for instance, and there was little we could do. So we wanted an alternative. But we also felt that this is a key aspect of customer satisfaction, and we wanted to see whether we could drive customer satisfaction levels up by controlling this. And ultimately also, when we control it, it gives us the freedom to layer in additional services. As I mentioned, for instance, delivery windows that are very narrow, or evening deliveries, or weekend deliveries, or carry up and carry away services and the like, which then is fully in our hands to develop that service offering. And we didn't initially start testing this with a view to getting costs down. But the fact is that now, as we have reached the critical mass in Stockholm and in Gothenburg as well, and we've just rolled out in Skåne, southern Sweden, we see that we are actually fully competitive from a pure cost aspect with our external partners in the area where we've chosen to roll it out. So where we've chosen to roll it out is the obvious areas where we can gain the critical mass and the scale, which is the densely populated areas. And what we've then found, in addition to being cost competitive, is that we really have customer satisfaction levels that are markedly higher where we deliver ourselves to end customers. So it also works well from that perspective. So the conclusions from our side is we've gone beyond testing to structured rollout. Southern Sweden is new to us now, and we'll continue rolling out in the other more densely populated areas of Sweden before we then likely move into the capital areas of Helsinki and Oslo as a next step.
That sounds very reassuring. So with that, thank you, Adam and Jesper, for this presentation, and best of luck on your journey towards the 10 billion.
Thank you, Fredrik.